Do RWAs hold the key to fractional ownership businesses? Cryptonews last updated, June 13, 2024 at 15:48 GMT plus 3 5-minute read. Fractional ownership is becoming more and more common with high-end items like art, real estate, and antiquities. These investments are more broadly available as this method enables many individuals to own a piece of a valuable asset. This development depends critically on real-world assets RWAs, which permit fractional ownership. To work properly and last, these models must be lawful and adhere to strict regulations. Trust is raised and investors are protected from fraud by this. The appeal of fractional ownership. A high-value asset might be held in part by numerous people who divide the cost and rewards. Divided maintenance responsibilities, diverse assets, and lower admission fees are just a few advantages of the system. It makes expensive markets investable by people with little money. Among the premium markets where this approach is prevalent are those for high-end art, rare collectibles, and luxury real estate. These days, for instance, investors of all stripes may buy pricey real estate, rare cars, and pieces of art. It is now easier to invest in these assets. Fractional ownership is mostly attractive because it may reduce financial barriers and provide more people access to valuable assets. With this inclusive strategy, the investment base is increased and diverse groups feel more a part of the community. Put another way, fractional ownership makes it easier and more just for more people to benefit from wise investments. Problem of legitimacy. Partially owned businesses that succeed must be fully lawful. Risks associated with dividends distributed across numerous owners mean that investors need to have confidence in the moral and sound management of these companies. Honesty and trust are the keys. Investors want to know in simple, unvarnished words who owns what and how much of it. Any dishonesty can damage investors' confidence in the business. Open channels of contact and the provision of accurate, independently confirmed facts are essential. For example, there was less regulatory monitoring, hence fake shares were issued in the Brooklyn Bridge hoax. This underlines the importance of morality and regulations to protect investment. Fraud must be avoided by fractional ownership corporations following strict regulations and being completely transparent. A safe investing environment is therefore ensured, and the fractional ownership model expands the part regulation plays. Fraud prevention in organizations with partial ownership is mostly dependent on regulatory frameworks. By strict documentation and asset ownership verification, they provide open transactions and protect investors' interests by discouraging frauds and providing legal security. Regulatory bodies verify the validity of assets and ownership holdings by audits and inspections. Companies are held accountable as well by their requirement for regular reporting to spot irregularities. Both the EU's MiFID Roman II and the US Second have established safer investment environments with robust investor protections and transparent reporting. These guidelines allow fractional ownership businesses to build dependable, secure platforms that maintain investor confidence and ensure consistent growth. Multibank is an example. Established in California in 2005 with a capital of about $322 million, Multibank Group has shown to be a reliable and trustworthy financial organization ever since. Reputable characteristics of Multibank, which offers a secure and transparent trading environment, are its robust operational and regulatory compliance. This solid foundation allows the company to grow while yet maintaining the stability and confidence required for success in the financial industry. Real-world assets RWAs are one of Multibank's main projects to be included into the fractional ownership structure. With its Multibank EO platform, the business uses blockchain technology to enable secure and transparent virtual currency trading, including ethereum. Multibank's offers are updated and certain and verifiable ownership claims are ensured via this bridge between traditional finance and the digital asset market. The trading platforms of Multibank support the following financial products: digital assets, shares, commodities, metals, and FX. These platforms make it possible to own portions of priceless assets, which opens up more people to participate in lucrative markets. Leverage up to 501 and access to more than 20,000 trading items allow investors to diversify their portfolios to reduce risk and boost potential returns. Projects of Multibank have a significant impact on fractional ownership as they provide an investor-friendly, transparent trading environment. Prompt money withdrawals and reliable transaction execution are two of the client-focused services that the firm offers to ensure successful operation in the fractional ownership market. Fractional ownership combined with RWAs is a manner in which Multibank demonstrates how a traditional financial institution may use and adapt to modern financial technologies. Through the combination of the stability and compliance of traditional finance with the innovation of blockchain and digital assets, Multibank offers investors a full and trustworthy platform, therefore expanding the accessibility and security of fractional ownership for a wider range of investors. Use cases for fractional ownership of RWAs. Fractional ownership of real-world assets RWAs is transforming investing by expanding the pool of people able to buy expensive assets. Several investors can jointly own masterpieces in the art market with this strategy, therefore enjoying the potential for financial benefits as well as aesthetic pleasure. Through the democratization of the high-end art market, this enhances public awareness and encourages shared cultural investment among smaller investors and art enthusiasts. With real estate fractional ownership, small investors may profit from rental income and appreciation while owning parts of valuable buildings. This strategy reduces risk, diversifies portfolios, and helps to improve impoverished areas since it pooled resources. Venture capital is evolving as well with fractional ownership, allowing more people to invest in early-stage, high-growth businesses, giving businesses more financing choices and extending their access to potential big payouts encourages innovation and entrepreneurship. All things considered, fractional ownership of RWAs provides access to attractive assets and broadens and more inclusively diversifies the investing environment. Conclusion. Though fractional ownership offers opportunities for additional investors, it is challenging to establish ownership and prevent fraud. Overcoming these challenges will need robust legal frameworks that ensure openness and security, blockchain technology, and real-world assets RWAs. Fractional ownership will most likely benefit a wider range of investors as these rules and technology advance. Follow us on Google News. Disclaimer. The text above is an editorial article that is not part of Cryptonews.com editorial content.